So this week we talked about the federal, or we're talking about the Federal Reserve System. We talked about the Board of Governors, and we spent some time talking about the Federal Open Market Committee. And as we said, we are today talking about the Federal Reserve Bank individuals and how they're managed. And I also like to spend some time talking about the European Central Bank and its structure, as it is an important financial institution that has a significant impact on the world economic and financial um, scene, and its structure is rather challenging, very similar to the Federal Reserve in the U.S. And it's different in the sense that because it is it used to be a individualized countries, and now they're unified under the European Union. And even within the union, they have the Eurozone, so that makes it a bit complicated. And even though we are used to having these singular central banks in the European continent, they when they gave up their own individual currencies, um, and met under the euro as a currency, many of these central banks lost their ability to govern. However, their supervisory role and their regulatory role continues. However, because they are within the Eurozone and the European Union Economic Community, they are highly interdependent, and therefore it has significant challenges. Anyways, going back to the Federal Reserve Banks, this will actually conclude our discussion about the Federal Reserve Bank, the governors, the banks, the 12 banks, the governors, and the FOMC. So we said there are 12 individual banks, Federal Reserve banks, in their respective zones or areas. And here in Louisiana, we are under Atlanta. And each one of these individual banks are actually incorporated individually, separately. So they are not branches of the Federal Reserve System. They are almost independent entities. Now, each one of these banks have or has a 9-member board of directors. Now, again, remember, these 12 banks are, when I say almost independent, their regulation, their duties, their work is obviously spelled out for them. So the purpose of their existence is regulated or, by the Federal Reserve Act. However, their structure and their operations and how they undertake day-to-day operations is almost independent. And I keep saying almost, and it actually comes from how the Board of Governors has a say on the board of these individual banks. So let's get to it. 12 banks in each area. Each bank has a separate 9-member board of directors. Now, remember that the commercial banks that are in the area actually hold stock of their district reserve bank. So when you look at this area, for instance, in Louisiana, the commercial banks, or in New Orleans area, the commercial banks who actually are members of the Federal Reserve System, they hold stock in their district's reserve bank. So you can see how the Federal Reserve System is owned by the commercial banks within their district, and that gives them that independence. However, the board of directors for these individual reserve banks have 9 members. The 6 members of each board of directors for the 12 banks are appointed by the commercial banks who actually own or hold the stock of the district's reserve bank. And then The three remaining directors are appointed by the Board of Governors of the Federal Reserve System. So this is where that almost comes in. So, 1/3 of the board is actually appointed by the Board of Governors of the Federal Reserve System, which makes it so that even though the individual banks are independently owned and independently run, since 1/3 of the board is appointed by the Board of Governors of the Reserve System, they are almost independent. So the reserve banks have at least one branch, and in the case of New Orleans, for instance, there is one branch of Federal Reserve Bank of Atlanta in New Orleans, and each branch also has its own board of directors. Now it's really interesting that the branch directors are appointed by the Reserve Bank, the actual bank, like in the case of New Orleans, the Atlanta Federal Reserve, or the Board of Governors. Now, you do realize how impressive actually the system is built, because the commercial banks hold stock in the district reserve bank, and because the 6 of the directors out of the 9 are appointed by these banks, the directors actually serve as a link between the Federal Reserve System and the private sector. And not only the private sector in the sense of businesses, but also the private sector in the sense of commercial banks. So in a way, commercial banks are active in their own supervision and in their own regulation. So a system that polices itself with respect to their financial regulation and supervision. So it's also very interesting that the Federal Reserve actually does not have a portion of the budget from the Congress or from the U.S. Treasury. In fact, Federal Reserve banks collect fees, and they have their own budgets, and they actually fund their own operations. So what sort of fees that they collect? Well, first of all, remember how on Wednesday we talked about the Federal Reserve System through the Open Market Committee can have open market operations, and through this they have a significant balance sheet, especially for the past 10 or 15 years, and these assets generate income for the Federal Reserve banks. And these income seems to be quite significant, actually. I mean, if you think about the Federal Reserve transfers, I'll get to that in a minute. So other than these asset holding earnings, we also have fees received for services that the Fed provides and charges a fee to other depository institutions, to other commercial banks. So these services are check clearing, fund transfers, automated clearinghouse operations, and whenever, if there's any lending operations or if there's any Fed window operations, and anytime an interest is charged by money market operations, the Fed will collect either the interest or the fee. So these fees and interest and earnings, the income, they are used to cover the cost of Fed and their operations. And anytime they actually have a surplus, they transfer this to the U.S. Treasury. And it is a very profitable operation. I mean, if you think about how the post office is one of the government provided service in the U.S., I think the only one or only federal one, and they seem to be generating a significant loss year after year. But when it comes to the Federal Reserve, they seem to be a very profitable business. So anytime the earnings of the Fed is in excess of the their operational costs, this excess is transferred to the U.S. Treasury. So beginning on 2003, this is provided by the Federal Reserve.gov. Their first transfer was about $20 billion for multiple years. And then for the past 2014 and 15, you have almost $100 billion of transfer to the US Treasury. So each bank has a very, interesting duty. And the reason I call this interesting is because, I mean, obviously the banks have, ultimately common goals and duties and responsibilities. But other than that, they also have their own interesting jobs that they provide or services that they provide. Like, I was talking about the other day how, financial data or economic data are provided by St. Louis. And then you have other Federal Reserve banks providing economic research. And so because of that independence, every one of these Feds or Fed banks have rather undertaken certain aspects of economic activity, right? So in my case, it's research or data or even to outreach programs to academics or businesses or the agencies. So anyhow, the general responsibilities of individual banks are, well, first, they need to supervise and examine state member banks. So this, again, we spent some time talking about this, especially when we're talking about the Basel banking rules, that the supervision and the regulation is the duty of the Federal Reserve. So the system as a whole basically performs these duties through the branches. Well, they're not actually branches, but through the Federal Reserve banks for their respective districts. So whether it is a national bank or a state bank, the operations of the banks and the branches within their district are regulated or supervised and audited by the Federal Reserve banks for their respective districts. They also do lending to the depository institutions. Remember again that we said the Federal Reserve is the lender of last resort, so they do lend to depository institutions. And I remember from my time, which again, was in Turkey, and we used to actually borrow from the central bank time to time, and we used to pay interest for it. It's usually very short term, but they also helped us with cash transactions, and anytime we couldn't handle the size of the foreign exchange transactions, and the central bank was always there to help. But again, it's a singular central bank that we had in Turkey. So in the US, this is the duty of the individual Federal Reserve banks for their district. So if I was working for a bank in New Orleans, then I would be working or corresponding with the Federal Reserve Bank Atlanta and possibly through the branch in New Orleans. So they also provide key financial services. And I think on Monday, we kind of touched base on this, that they provide services like clearing checks, the Fedwire, ACH systems or automated clearinghouse systems, and serving as a bank for the US Treasury. And this is very important. Many people think that when the Fed actually issues a bond, it is the Fed actually issuing it and receiving the money. But a lot of the times, well, most of the time, that US Treasury is the issuer. Obviously, that's why we call them treasuries, and Federal Reserve is the bank who's undertaking the actual underwriting operation. So the job of the Federal Reserve banks is to serve as a bank for the U.S. Treasury. And then finally, their job is to examine certain financial institutions to ensure and enforce compliance with federal consumer protection, lending laws, and community development. So again, the Federal Reserve banks are almost like a shadow Fed in their districts. And through these banks, the Federal Reserve System operates through their federal existence. So, and then I think that's about it. So, I mean, I will provide some links for you to read as to the history of the Federal Reserve and individual banks and how it actually became this way. And I think that it's a fascinating structure. Now, let's talk about the organization of the European Central Bank. And as I said, I want to spend just a few minutes as to how is it similar to our Federal Reserve and how is it different than the individualized central banks. Now, again, we need to understand that the difference between the European Central Bank and the United States Federal Reserve System is that just up until recently, the European continent, individual countries had their own currencies, had their own national independence, and had their own national monetary policies, and they were different countries. So in year 2000, starting from 1965 with the European uh, Economic Community, EEC, and then I think in 2000 we had the common currency in circulation, and then we have the um, establishment of the European Central Bank, and then we have the structural change of the European Central Bank. So with the Eurozone, to begin with, not every European nation who's a member of the EU is actually part of the Eurozone. So it is a group within a larger group. And so once you are a member of a common currency system like the euro, and you are once in the Eurozone, a few of your central bank duties are taken away from you. Like, for instance, you cannot actually set interest rates for your own currency. You cannot have an actual monetary policy. Um, so, from a regulator, you become more like a supervisor. So, your job becomes more to implement the overall policy and to maintain the safety and security of the financial system through audits and through operations. So, in a way, individual central banks in the European Union, in the Eurozone, are very similar to the Federal Reserve banks. And again, it is similar in the sense that they also contribute to the decision-making process at the ECB executive level, and they participate in the policy making, and then they are charged with the implementation of the policy. So the ECB is located in Frankfurt am Main in Germany, and um, as a central bank, obviously they have very similar um, very similar duties as any other central bank, but again, very, very similar to our um, Federal Reserve System. So this chart, so it's really interesting that when you look at it, you see it actually looks as if it's really complicated. It really is not. So we have, and I wanted to actually get to this. Oops. So we have within the European Central Bank, and currently the president is Christine Lagarde, and we have an ECB president and a vice president and the governors of national central banks from all EU countries. And again, this is very important because I want you to understand that within the Federal Reserve System, the participation of the Federal Reserve banks, other than the Federal Reserve Bank of New York, is on a rotational basis. So only the 4 of the remaining 11 Federal Reserve banks in the US get to have a say in the Board of Governors um, on a rotational basis. But whereas within the European Central Bank, the participation of the national central banks is a little bit more evident, a little more ongoing. So what it does, basically, the ECB is very similar to the Federal Reserve. It lends to commercial banks. It manages the foreign currency reserves. It ensures the financial markets and institutions with respect to their supervision, security, safety, and audit. And then they do the mint. And then they also have monetary policy duties. It has 3 parts. The first part is the governing council. The second part is the executive board, and the third part is general council. Now, again, remember in the Federal Reserve, let's go back. What we have is the Board of Governors that's actually above everybody else. And then you have the 12 Federal Reserve banks. And then as a side, you actually have a Federal Open Market Committee, right? And the Open Market Committee, so while the Board of Governors in the US make the policy decisions, Federal Open Market Committee is the implementation of those policies. So in the sense of ECB, we have the executive board, which handles day-to-day running of the ECB. So I think it is more like our Federal Open Market Committee in a way, I guess. So this one consists of the ECB president and the vice president and 4 other members appointed for 8-year terms by the leaders of the Eurozone countries. So then you have the governing council. This consists of the executive board, so these guys, plus the governors of the national central banks from Eurozone countries. So again, I think that in the sense of representation of national banks, and this is a little bit more inclusive than the Federal Reserve system that we have, because we only get to have a rotational membership of each area. So, as I am from New Orleans, we actually get to have a say probably every 3 or 4 years at the Board of Governors. So while New York has a permanent seat, we actually get to have a seat every 3 or 4 years. And with respect to the ECB, it seems to be a little bit more inclusive. But also, again, we are not a separate country, obviously. As a state of Louisiana, we are a state. We don't come from a different language or a different heritage. We are a state within the Union of the United States. In the case of the European Union, however, each of these countries are actual countries with different languages, different heritages, different histories, and up until recently, they were all independent sovereign nations, which still they are, but they actually gathered around the European Union, but that doesn't mean that they are similar to the United States. They still have their distinct national existence, and therefore, I think the inclusion of the national central banks within the governing council is because of that identity being quite distinct for each nation within the European Union. And then we have the General Council, which is more of an advisory and coordination role. So, yeah. So this is the organization of the ECB, and notice how. Let me just make this a little bit. So we have the executive board right here, and then all the way down, you actually have individual operations and the policies that are set forth. So I actually want to skip this part, but let's review it just very, very fast. So we have the principal coordinator of the council, the executive board, secretariat, internal audit. ESRB secretariat. I'm not really sure what that is. Communications, and so on and so forth. So as you can see, these are more about internal operations of the ECB, right? But then when you actually get down here, now you have more of policy setting duties of the ECB. So you have the monetary policy, the economics, statistics, the research, and market operations. And within each, you have individual structures that actually deals with individual. So for instance, for economics, you have forecasting, prices and costs, business cycle analysis, supply side labor and surveillance, euro area, and then fiscal policies. And you have statistics. This is where people like myself would actually be probably working. And then you have the research. Again, I'm guessing if I were to ever work for ECB, this will be where I'd be working. And remember, with the Federal Reserve Bank, we didn't have these distinctions as to, or at the Board of Governance level. That's why I said like individual Feds or individual Federal Reserve Banks of the 12 seem to undertake within their own domain research and statistics and economic activity. So with respect to the distinctions between ECB and the Fed, ECB seems to be a little bit more at a higher level, meaning that most of the Eurozone or European Union-wide activity is at the executive level. And I'm sure that individual national banks will do their own for their own nations. However, the union-wide or the zone-wide, the activity is conducted by the executive level or at the executive level. The monetary policy, I think it's very similar to the Fed in that both Fed and the ECB conducts the monetary policy or decides on the monetary policy at the executive level. So with respect to the economic statistics and the research and market operations, there seems to be quite a bit distinction. And in the US, these seem to be provided by individual Federal Reserve banks. And then you have the supervisory board. So I'm not sure what this would actually, correspond to. I would say that within the Board of Governance, they probably would have. Let's look at their chart. So within the Board of Governance, right, so you have the Division of Board Members, Office of the Secretariat, Division of Research and Statistics, International Finance, Monetary Affairs. So within the Board of Governance, you actually have this, the advisory councils and board committees. And so at the federal level in Washington, D.C., I think these are the similarities with the ECB. So the supervisory board in that sense, I think, is within the Federal Reserve System is all in the Board of Governance, but in the ECB, it's almost a separate entity. So as you can see, we have governance and operations, horizontal line supervision, systemic and international banks, and within themselves, they have their policy specifications. So I guess what I'm trying to show is that while the structurally central banks perform very similar duties, many countries have singular central banks, and then they have individual branches, which literally are branches. But in the case of Federal Reserve, you have a system where you have the board that governs it all, and then you have almost independent 12 bank entities that perform 4 main tasks that are very common, and then each bank seems to have a little bit more deviation and or additive duties to their day-to-day operations. And in the case of ECB, the national central banks are similar to our Federal Reserve, 12 Federal Reserves, and however, they seem to be a little bit more represented. And I think that there's a little bit more activity at the executive level at the ECB for federal or for union-wide uh, operations of the ECB. And then you actually have the national banks, I'm assuming, conducting their own economic and financial research and policies and whatnot. So, but like I said, the point I wanted to show is that these two unique entities, the ECB, especially the Federal Reserve Bank, Federal Reserve System in the US, are quite distinct compared to the rest of the world, and that you know for their operations of regulation and supervision, their structure is quite unique as well, and and that's about it. So um, this week we talked about the central banks and their operations and their structure, and I provided some links, and I will provide for today some links as to their history. And obviously, previous weeks we talked about how they could fail in their supervision, and then hopefully next week's we'll get into a little bit more detail. So let me know if you have any questions and if I could be of any help. And thank you so much for working with me. And I hope to see you all soon. So thank you so much. Bye for now.